Welcome to the Metro Phoenix Real Estate Market Overview. So one of the things a lot of commentators don't do is say what their biases are. And so I'm going to come out and tell you what my bias is. My bias is I'm looking for recessions, and I've been looking for recessions since at least 2006. And why is that? Because it's opportunity. If you want to be a real estate investor, in an ideal world, you buy in the middle of a deep recession and then you make your wealth that way. So I'm looking for that, and there's always the possibility of confirmation bias when you're looking at data. That being said, it doesn't look like we're in one at the moment. So let's get in, take a look at the data and see what it says. We're currently looking at a section of a chart that I've been populating for nearly 2 decades. And let's focus on the yellow bars. The yellow bars are purchase price of median sales prices of homes as posted by the regional Maricopa County MLS. And if you look left to right, you can obviously see the increase in sales prices, which we're all well aware of what's happened over the past few years. But what's at question is what's going on now. So if we take a look at the last, let's just say 3, 4, 5 months, it's we're seeing a slight rebound from individuals adjusting, maybe let's just say market adjusting from increase in interest rates. So it's kind of hard to tell what's going on with the last data that we have in July. Is it just 1 month that's down a little bit? Are prices still going back up? Are they generally flat? I'll be conservative and I'll say sales prices are generally flat, kind of neutral. This next screenshot is entitled Appreciation. Now, let's just call this me taking some artistic liberties. And what do I mean by that? This is a straight line, and I put this in there to show what steady appreciation what would be typical by the market would look like. And so now I've got to quantify that, typical of the market. So this line, if I remember correctly, I think I set it at 5% annual appreciation starting somewhere right around January 16. And it was a little hard to figure a start date because we had some really repressed prices due to the last recession. Now here's the points I want to make out with this appreciation line and this trend line is back in the day being roughly 2 decades ago, when my employers wanted me to project a value of a property out, do net present values, things of that nature. The rule of thumb in the market, if I remember correctly, because it's been so long ago, was 3% annual appreciation. And I said, okay, let's just make it 5. Let's cover if I'm being a little too conservative. So we've got this straight line, and it's ending right around July of 2023, and it's showing a value of $300,000. What that means is if our housing market appreciated as per 5%, which let's just say would be maybe it was a little more than conservative factor, annually, then all the homes right now, the median price of them, or we can call it average, would be $300,000. But that's not the case. The current prices of homes are, what do we see, right around the $430,000 mark. So this is where I'm saying I'm taking kind of artistic license in putting this in here. I personally wanted to know, what kind of gravitational pull are we seeing from how inflated our market had got? And I think this is kind of an easy way to do that and say, hey, we've appreciated 130,000 more than what we would have normally ever projected back in the day. And I'm going to do something that's going to be a little unique here. Is most real estate analysts and commentary aren't also going to commingle stock trading, because they're their own kind of animal. But I like to look at things like that. I like to look at the lines. And so I would suggest to you, you look at that line and go, okay, on one hand, it means nothing. And then on the other hand, maybe it's kind of a gravitational pull of where a balanced market should be. Yeah, it's aggressive. Do I think things are going to go there? Probably not. Actually, I kind of suspect that over time, that line, since it's linear, will end up meeting it or pulling towards it. So it's more of an informational thing, and again, artistic license. Listings. So what are they saying here? They're saying there's a total value of 14,422 properties currently on the market for sale. If we kind of step back just a little bit and look at this chart, we see it's the overall inventory of listings for sale has dropped over the past 10 months. Interesting. Do I have a quick answer for that? No, and we're probably not worth it at the moment to delve into that. I would say the takeaway is, as of right now, listings are pretty low based on historical values. Now, is it as low as what we saw in 2020, 2021, as we see a little to the left of the graph? No, but that was highly atypical. So I would say focus at this point on listings they're higher than what we see on the blue line beneath it, which is the number of sales. So we've got more listings than sales. They're not touching, which has happened at points before, but they're generally low. Total sales. Well, unfortunately, when I took a screen print of this, the little indicator from me hovering the mouse didn't show up. So the very bottom line, the blue line, the one that looks like a mountain range, that is total sales. And the legend for that is way to the left, and it gets cut off on my view. And like I said, I've been tracking this stuff for nearly 20 years. So I'll just tell you what that number is. The total sales for July is 5,775 homes. And that's generally a pretty low number. And if we look across, let's just say from right to left at sales, we see that they were peaking. And again, I'm going to guess, I believe that line that they were peaking at is probably 10,000 units per month. So we had a few times where we were kind of like touching that, maybe slightly crossing over it. But once we started getting the interest rate increases, total sales dropped significantly. So, look at the data, let it tell you, what it's saying. And then I'll tell you what I think it's saying, or what's important in my mind is they're low. So let's move on. So this is my days on market graph. I usually don't go here unless I want to see kind of a leading indicator. And the leading indicator is that if days on market are jumping upwards significantly, that means the market's getting softer. It means that it's taking longer to from when you put your building on the market to when you put it under contract. If the days on market drop significantly, you usually are seeing bidding wars and things like that nature, where you're able to put it on the market and find a buyer pretty quickly. I would say for now, ignore the lavender line. That's an inventory line that I've put out for, and the scale for that's on the other side of the screen, and it's not really going to add much to this presentation. So what's days on market telling us? Well, it's telling us that over the past 5-ish months or so, it's lowering. So someone that was going to sell their home 5 months ago, it was taking them roughly 80 days to get under contract. And now we're at 66 days. And if you're a seller, that's a big deal. Especially if you're a seller that has already gone out and committed yourself to another property, or maybe you're paying 2 mortgage payments. So every day that you're on the market is another day that you think of lowering your price. So think of increasing days on market as lowering prices, because it's pressuring that seller. That seller is thinking, oh, I've got to lower the price to find the market. And the lower your average days on market, the more willing sellers are to increase their prices. So just another indicator. The other charts that we're looking at will usually tell a story, but sometimes a little additional data helps solidify the way you're thinking about something. So what's the data doing? I'm kind of going with doing opposed to saying, because saying kind of implies speculation. So let's go with what's the data doing. Sales price. It's kind of hard to tell what that's doing. What will happen with that is in 5 to 8 months, we're going to know. Was it a gradual upswing? Was it going to be flat for a while? Was it declining? I'm leaning towards it looking like it's flat. That's my best guess. Inventory declining. So keep in mind, when inventory declines, it's a positive indicator for market price. So let's just assume that our definition of a positive indicator is that it's going to increase prices in the market. So declining inventory, positive indicator, because prices will usually go up with that. Total sales. What do we have here? Increasing question mark, decreasing question mark. Yeah, I looked at total sales and honestly didn't really know what to make out of it or from it, other than it appears low. Another interesting bit of information to put in here is supply. And supply is calculated by, you take the inventory, you divide it by the sales, and in this case we have 2.5 months of inventory. Back in the day, being over 15 years ago, that would have been considered extremely low. But based on the past 15 year or so run we've had, 2.5 months is not bad. So I put in here, typical would be 3 to 6 months. Typical for the last 15 years, no, but I wouldn't call the last 15 years typical either. So let's just call this supply a positive indicator that it's generally low, and it'll be adding pressure to keep prices up. So the conclusions. I have been crying wolf that we have an impending recession since before COVID. And I have to admit that the market's been showing itself to be pretty resilient. And so that's bullet point number one. The market is showing itself to be resilient. And I may just read through these bullet points because I don't know if I'm going to be adding anything more than what's already been surmised here. Most concerning is the drop in total sales. However, this drop in demand has been offset with a corresponding drop in supply. So, that gives me a visual. Let's see if I can give you a visual. Picture inventory on a chart above purchases, above sales. And we've really shifted downwards. Both those used to be higher up. What's going to be the implication of that downward shift? Downward shift of less sales, less on the market. This is very far speculative, and the data, I don't know if, let's just say it doesn't even support it, but let's just throw one possible theory of what could happen. Everyone's talking about people being locked in. Well, they've got these rates, they're not moving. Wouldn't it be interesting if the data played out that our market shrunk? And when I say, what if our market shrunk, or if it played out as if the market shrunk? Well, what if, and I'm throwing numbers out because I don't know what these are off the top of my head. Let's just say we did 800 million in total sales annually, and then there was just less turnover, and maybe prices stayed the same, and maybe our market is going to be a 600 million in total sales annually market, because of all these concerns that people have, or not concerns, but maybe they're locked in of interest rates or something. That would be an intriguing thing to see play out. I'm not saying I'm projecting that. I'm just saying, it's an interesting thing to look at. What do I think? I think that downward trends take many months to play out. If you look at the last recession that we had in 2006, the inventory skyrocketed and the prices didn't fall for 22 to 24 months. So sometimes the effects of an action are going to be a year to 2 years out, and what we see in the beginning isn't the full impact. Just as I said, I was just going to read this because I don't know if I'd have any additional insight. Well, let's get back to reading it. I would caution against thinking more inventory would result in more sales. If that was the case, it would be the result of pent-up demand, and we would very quickly see prices increase, inventory drop, and days on the market drop. Okay, so yeah, I guess I want to say more about that. I keep hearing commentators, and I'm also, it's kind of a holdover from the COVID days, and I remember real estate analysts saying, there's not enough inventory. The builders aren't building enough. I would say, if you look at this data, that it's not telling us as of right now that the reason our sales volumes, our total sales numbers are low, is because there's not enough to choose from. I don't think the data is saying that. Now, have we had that issue in the past? Yes, but I don't think that's as of July's numbers of 2023. The other indicators that would support that just don't seem to be flashing red lights at me. And like the last bullet point says, my guess is more inventory would just result in not only lowering prices as the end result, but it would first show itself up as increased days on market. And as I said, when you're a seller, and maybe your home's now vacant. Maybe you moved into your other home. That weighs on you. So if you and I are just looking at numbers and we go, well, it's only the difference of 60 days to 70 days. Well, when you've got an empty home and maybe 2 mortgage payments being made, that 10 days extra time on the market may just be enough where you're like, okay, let's lower the price $5,000. So more inventory, I think, would result in longer days on market and would be pressuring sales prices. So hopefully you guys found this interesting. Thank you for taking a look.